Hello, welcome to Monthly Report. Today is the day to report January 2021. Today we'll report the third wave of COVID 19 as well as the first weeks of Joe Biden presidency. And last but not least, the boom in financial markets. My name is Hugo Marques de Souza and this is Connected, the podcast of Nova Economics Club.
The ECB is ready to do whatever it takes to preserve the euro.
Is that he were rather the poor were poorer.
This can be the most important step we could take to prevent another recession.
Welcome to our new series of the podcast Connected. The concept is simple of Monthly Report. Each month we are going to discuss with members of our club what were the most relevant economic topics that happened on the month before. And today I have with me Henrique Santos, Vice President of our club, Tiago Paul, Head of the Projects Department, and Margarida Caroço, member of the Human Resources Department. Welcome to our first edition of Monthly Report. And let's start. We'll start with our health focus, the third wave of COVID-19, because it is impossible to talk about this month without talking about this third wave. Portugal in January felt the full force of its third wave of the coronavirus pandemic, appealing for international help for relief overwhelmed hospital staff. Prime Minister António Costa has acknowledged that the nation's hospitals are under gigantic pressure. On the first wave, Portugal was known as a golden standard. On the second wave, we could just survive to the second wave with partial confinement, and on this third wave, it was a big disaster. Tiago, I ask you, what happened for this situation for Portugal to pass from the best country in the world to the worst one?
Hello everyone, and thank you to the podcast team for inviting me here today. Some of the reasons for Portugal's situation are pretty well known, so I'll not delve too deep into them. Of course, now we have new variants, but this is a pretty universal phenomenon, and the variants are becoming dominant everywhere. So this cannot be the sole reason for why Portugal is faring relatively worse. We must look at public sentiment, because this is what drives human behavior. And one of the things that affected public sentiment in late December was the arrival of the first batch of vaccines, which of course made people euphoric because this was the first piece of good news people have had in a long time. Of course, now in hindsight, we know that it was too soon to declare victory and that the worst was still yet to come, but this may explain why people maybe kind of relaxed their behavior. Then, of course, we had the Christmas period in which many European nations increased restrictions. Portugal kind of relaxed them, which we can criticize now, but we must remember that there are economic and political decisions behind this course of action. The economy is already very fragile after almost a year of reduced activity, so it would be very difficult to restrict economic activity in one of the most profitable times of the year. Of course, now we're looking at a potentially 3-month lockdown, which is going to be extremely harmful to the economy. So in posteriority, we can balance if it was worth relaxing restrictions in Christmas or not. Also, one of the pieces of data which I find very interesting to look at to understand people's behavior is the Google mobility reports. Google has been publishing these reports on people's mobility based on their geolocation so that we can understand where people are spending time. And for instance, if we look at the period just before Christmas, on the 22nd and 23rd of December, visits to retail and shopping centers was 2 to 3 percentage points above the baseline, the pre-pandemic baseline, which shows that people were taking risks before Christmas and they were not as afraid of the virus as they were before. We can also use these reports to compare the first lockdown in March versus now. And if we look at March, we see that you see a huge reduction in people's mobility 2 days before the government declares the state of emergency, which shows that people were not waiting around for the government to tell them to go home, for them to actually go home. They were reacting they were acting in advance. Whereas if you look to the situation now, the government declared the second lockdown on the 14th of January, and it took 8 days for there to be another reduction in people's mobility. So people were much slower in reacting to the new lockdown, which shows that people are more reluctant on going lockdown again, and they're not taking it as seriously as they did in March. And finally, just very quickly to talk about the situation in the hospitals. We know that Portugal in January was the worst country in regards to new cases per capita, but this would be more or less okay if we had an equally well-robust health system, which we do not. So if instead we look at new cases per hospital bed, which analyzes the burden we're putting on our health system, Portugal was also the worst country in January, which explains the situation in the hospitals and how our health system was completely overwhelmed.
Okay, thank you, Tiago. And Margarida, I ask you, do you agree with Tiago when we look at what happened in January, that this was the case, that was the cause of this disaster, and what can be done to avoid this?
Hello, I'm Margarida, and I want to also thank the podcast crew. And I believe that if we want to open up and resume our economic activities, it is really important to continue to increase the amount of tests daily. That is, ensure access to rapid and reliable tests everywhere. Of course, it is important to as well continue the usage of masks and social distance, as well as washing our hands regularly. That is critical. But in Portugal, we have seen this importance of testing regularly. The more we test, the better we can trace and prevent outbreaks like the one that occurred over December and has caused us to stay in this lockdown once more. So I really want to emphasize the importance of testing even more, and let's see how this all plays out in the future.
Yes, because Henrique, we need to reopen our economy. We are on a second lockdown, a full lockdown. Do you think that this measure was the best one?
Well, first, hello everyone, and let me thank you, Hugo, very much for the invitation to this episode. Well, long story short, there was no other option than doing a lockdown. And when analyzing this question, I like to think about this always as an economic decision. So choosing a lockdown or choosing not to go on a lockdown is an economic decision. And somehow you are indirectly attributing a value to human life, which is something we are not very used to do. But if we think a little bit about it, let's see. So if you choose not to go on a lockdown, what you're basically saying is that, for example, the costs on unemployment, on increasing public spending, on firms shutting down, basically those costs outweigh the cost of lives. And so you choose not to go on a lockdown. When you choose to go on a lockdown, it means that the costs of lives are being too huge. And so that's the best decision you can make. And then there are, of course, long-run effects. So if you let the disease spread, if you don't control the disease, if you leave the economy open, well, you have losses on human capital, and you will undermine the trust that people have in institutions. And you see, the social contract that the state, the government established with people can be broken, and that can have significant impacts on long-term growth. At the same time, if you choose to go on a lockdown, you also have to, for example, two impacts on growth. You have firms that will eventually shut down, you lose capital that you will never recover, and you have massive effects on human capital due to education. So if you ask me, what is better? So should we go on a lockdown? Should we not go on a lockdown? Well, given the situation that we arrived, and if you also look at what other countries did, I think there was really no other option than going on a lockdown.
Yes, that's really what was expected, and the economy probably will have another recession, and we'll see how this is going on. Now let's move on. Let's report another aspect of this month. Let's go to the US financial markets. Although the IMF reported a global 4.4% economic contraction, financial markets and indexes have been experiencing record highs, either here in Europe or across the ocean. In the US, the growth of the financial markets and, most importantly, the network of tech companies propelled the welfare of Elon Musk, who became the world's richest person. In the middle of these contradictory values, several hedge funds almost went bankrupt due to the increase in value of stocks they had shorted against. What is to short sell a stock? Is basically to borrow it from someone else right now, immediately sell it, and to buy it back before the maturity of the borrowing. To short a stock is essentially to bet against the stock, as you are hoping its price decreases of the maturity of borrowing in order to gain profit. Some independent investors took notice of massive shorting actions from hedge funds against GameStop stocks, and knowing that the shorted stocks would have to be bought back, which would gain increase in their value, they collectively bought the stocks, hoping to turn a profit. This was the spark which led to the surge in price of certain stocks, which almost bankrupted several hedge funds. Margarida, I ask you, where can we draw the line that separates a free market and where should be the regulation that protects the market?
So, right, that is actually a very interesting question. There has been a lot of debate around the legality of the actions of not only the hedge funds, but also of the individual investors. There are arguments of market manipulation on both sides, levied against the hedge funds as well as the individual investors. Now, I first want to point out that the hedge funds are allowed to short sell. It is a perfectly legal strategy that can make a lot of money quickly. That is, unless the share price goes up rather than down, which is what happened in this story. Now, the question is whether the individual investors took part in any illegal activity. And what I believe, according to the Securities and Exchange Commission, who are responsible for regulating this market, allegedly, for there to be market manipulation, it must be proved that either side was knowingly spreading false information. And I believe that is not the case on either side. While it is true that individual investors were in fact communicating online and sharing their opinions on the market, that is something that is completely legal. They are allowed to discuss the market, share options, and even let other buyers and people playing in the market what their next move will be. Now, what is potentially illegal is how some certain trading platforms responded to the GameStop madness, for instance, only allowing users to sell or hold the stock, meaning that some users were not allowed to buy the stocks. This is what I believe could potentially be illegal. Now, concerning where the line should be drawn, I believe it's when investors start to organize or collectively coordinate their behavior in such a way that together they begin to artificially manipulate the prices of the shares. Usually it's an exogenous event that leaves the investors to buy up the stock, and it should not be people coming together and organizing their moves in such a way that will artificially manipulate these prices. Finally, I want to finish off with this idea that we should pay more attention to the fact that an economy in which individual fortunes are so closely tied to the health of the stock market rather than the income growth could be potentially fragile and is something that we should pay more close attention to in the future.
Okay, thank you. But Henrique, we are in a recession. Supposedly we are in a global recession. Do you think that this growth of the financial markets is artificial?
Well, let's first go back to basics. So, when financial markets were created, what was their primary role? So financial markets were created to serve basically as intermediaries between lenders and between borrowers. So the importance of shares and bonds for companies, for them to be able to finance and to invest, and which ultimately leads to growth, is very important and very well known. And also the importance of financial markets as a whole in somehow breaking the monopoly that banks had in financing is very important. So this is what was their primary role. But what we see nowadays is basically that financial markets are only based on speculation, and the business of trading is basically emerging. So people now use financial markets to speculate. And if you look at the regulation is very little. It's not enough. And I think that we haven't learned much about the 2007-2008 crisis, and we may be following on the same mistakes. Because, for example, derivatives are very important to reduce risk. Yes, of course, but they are very, very dangerous in terms of speculation, and you need to be aware of it. So just to go straight to your point, if you see economies that are sinking everywhere in the world, and you see market capitalizations growing and growing and growing, so I mean, at the end of last year, the market capitalization as a percentage of GDP in the US was above 200%. So that cannot be a natural value. So of course that this growth is artificial. It is due not only to speculation, but also to some decisions regarding monetary policy that were necessary, but that of course have significant impacts on financial markets, and that can potentially be creating a new speculative bubble.
Now let's talk about bubbles. Tiago, this upward trend of stock prices has been more substantial in the technological sectors. Because of this, some comparisons have been drawn between the state of the financial markets today with the state of the financial markets in the .com bubble period. Do you think these comparisons are legitimate?
Well, yeah, many comparisons have been made to the dot-com bubble, and there are many common points. However, there are also some differences. But starting with the things they have in common, today, as in during the dot-com bubble, we see a lot of affluence of retail investors, so small individual investors, which invest in the stock market a lot like Enrique was talking about. It's based more on speculation than a thorough financial analysis of the intrinsic values of the firms that they're investing in. So this can create this discrepancy between the firm's real value and their stock value. We also see another valuation of IPOs, as we did during the dot-com bubble, and also another valuation of the S&P and the NASDAQ. And the tech sector, as you were saying, is gaining a lot of weight again, just as during the dot-com bubble. The main differences I'd like to point out is that during the dot-com bubble, interest rates were slightly above 5%, and now they are at the zero lower bound. So in 2001, they had other options to invest in, while today, people who have savings do not get a higher return in investing in bonds as they did 20 years ago. And yes, we are in a recession, but the US government has been sending checks to families to counteract the fall in demand. And the wealthier families do not have anywhere else to channel these checks other than to the stock market, because nowhere else are they receiving as high as a return. I'd also just like to mention that we are in a recession, but the tech sector is also one which has been least affected because it's become essential.
And probably had a higher growth, probably, no? Because of the use of more technology.
Yes, exactly. It depends on the firms, but generally, yes, the tech sector is one where we can say that may have benefited from this crisis.
Exactly. So this is reported. Now let's report in international politics the effects of the first weeks of the Biden administration. President Biden was very active in his first days in office. He signed several executive orders, most of them to undo decisions of President Trump. Some of these decisions were expected by the US international partners, such as rejoining the World Health Organization or the Paris Agreement. However, the launch of his new plan to reinforce the Buy America Act was probably not following the same lines of Trump. Biden puts his efforts in protecting the American workers and national production, increasing the fear that America is on its path to become a great protectionist power. This was also patent in his promise of changing the entire federal car fleet by electric cars, made fully in the United States by American workers. This change into green economy and against the oil industry was predictable based on the campaign done by the president. This represents the largest federal investment since World War II, as the car fleet of the government is composed of over 600,000 vehicles. A little thing. The reactions among the US were very different. Some supporters of the president were glad by the fulfillment of this promise, but others were concerned that it was too radical for a country in which oil and fuel cars are not only companies generating millions of jobs, but a cultural way of life. Enrique, what do you think that was, by economic point of view, the most important decision taken by President Biden in these few weeks of January?
Okay, selecting the best one is quite difficult, but let me try. So first, let's understand a little bit the context of all of this. So after a very troubling transition of power in the US, we finally have a president, and which has been taking quite a lot of action via executive orders and not necessarily through legislation passed in the House and in the Senate. And so I would quickly take a look at three policy areas. And we have to start, of course, first with health. Of course, we cannot abstract ourselves from COVID. And there has been a substantial change with President Biden of what had been done in the past by President Trump. So the rejoining of the World Health Organization. So that's a very good political sign. And you can say that, okay, the WHO is not as independent as we would wish. It has a lot of national political interests at stake. Yes, okay, but right now it's very important that all countries are together sitting at the table deciding about such a pressing issue. We can also talk about his mask mandate and his COVID policies, which of course have been taking effect on reducing the new infections, but as we can see in the data, have not yet affected the number of deaths, for instance. But this is very important because the US really needs to get COVID under control, and finally at least someone is listening to science, and that's good to know from a large power like the US. And then we can talk a little bit about the environment. So yeah, sure, rejoining the Paris Agreement is very important, of course, but let's not forget that that is more a political sign than actual action, okay? Because Paris Agreement is a set of goals which are non-binding. So if you are just in the Paris Agreement and you do nothing, that's the same as not being in the Paris Agreement. Of course, that the US being in the Paris Agreement is a strong political sign to the world. Okay, yeah, sure. But let's wait to see some real action. And regarding this real action or not, you were mentioning, Hugo, about this huge investment on electric vehicles, which we can look at in two different ways, of course. So this is a huge investment. We are all going very Keynesian right now during a recession, so this is amazing. We are increasing government expenditure. Yes, the US has a huge debt, but of course it's debt in dollars. The dollar is still the dollar. They can print more debt. Everyone is printing more debt. Okay, you can say that this is good for the economy, but well, of course you will eventually have to pay it. There are no free lunches, of course, but this is good to smooth the cycle. But then if you look at the environmental rationale behind it, I'm not so sure that's so good. Because first you are discarding well-functioning oil cars. That's the first point. And we are substituting cars that most of them probably already working. And then if you look at the US energy sources, you see that because, of course, electric cars are moved by electricity. And so how is electricity produced? Well, 80% from fossil fuels. So what are you changing? You are not changing anything. So don't take me wrong, but I think this is quite a joke, this policy. Very honestly, it's quite a joke. And we really need to see real action in climate change. And I'm not so sure this is the way. And I'm a bit disappointed right now with President Biden's policies. And going very quickly to international trade, well, in there we don't see many news. So he's basically following the policies from the previous administration. I would just like to invite you to take a look at its executive order. It has a very long name. It's the Executive Order on Ensuring the Future is Made in All of America by All of America's Workers from the 25th of January. Just read the first 2 to 3 sentences. Nothing has changed in the US regarding protectionism, and it's very sad.
Okay, so probably what we are going to see is again the protectionism with another color of another political color, but probably again the protectionism. What do you think, Tiago? Do you think that we are seeing protectionism in Biden policies?
Yes, exactly. I wanted to pick up on that because, as we were mentioning, under President Biden, we see a move to rejoin the WHO, the Paris Agreement. So we're seeing the US stepping back in its isolationist movement that characterized the Trump administration. But we're not seeing the same in trade. Trump took a very aggressive stance regarding trade. It was a lot... his message was a lot about making America great again, America first. And as Enrique was saying, Biden is not reversing that. We talked about the Buy American Act, which basically restricts federal procurement contracts to American companies that produce in America. So this is shutting out already foreign firms in federal procurement contracts. And I think what we can interpret from this is that it's the realization that Trump was not the problem. He was the reflection or the symptoms of the problem that have plagued America due to globalization. Many workers have been left behind. And Trump was quite aggressive in pointing this out and in his trade policies. But the problem has not gone away just because Trump has gone away. And President Biden is the president of the same country that Trump was. So there's still the same dissatisfaction, and we don't see President Biden reversing the trade stance of the previous administration.
Okay. Enrique focused the point that was that this green transition is not to be as green as we may thought. Probably we should put that more on the engineering side of the thing. But I would like to ask you, Margarida, do you think that rejoining the Paris Agreement was a good decision?
All right, thank you. So, on regards to Biden rejoining the Paris Agreement Act, I think it's a fundamental step. Of course, I was quite disappointed when Trump decided to leave the Paris Agreement. And as Enrique did point out, it is a step, but is not the solution to the problem. As a lot of these green cars continue to use fossil fuels, I believe the percentage was 80% of these are still using fossil fuels. And it does disappoint me to see that we are making very small progresses and we should be taking leaps and trying to continue. And knowing that the US is such a huge influential power to the rest of the world, it is sad to see that they are not taking such a big role on this issue. That is an issue that we should be paying a lot more attention to.
Okay. Thank you for joining me on this first episode of Monthly Report. It was a pleasure. And I hope you've liked it. And see you on the Monthly Report of February 2021.